In this video, I wanted to break down a trade that made me $355 overnight. I want to show you exactly how I did it, the strategy I used, and how you can do the same thing as well. Diving into it, here's the trade. I entered here on August 27th and exited the first thing in the morning on August 28th, the very next day, and made $355. Here is a tasty trade. My broker, you can see where I entered here at 9:34 a.m. Central Standard Time and exited the next day at 8:30 a.m. for a $355 profit minus commissions and fees, about $349. So that was the trade. Now, how exactly did I do this? If we zoom out of the trade, we can look at a lot of things. First off, we were in a prior downtrend. In a prior downtrend, you can see here that it sharply reversed. When it sharply reversed, it formed a high right here. This was known as our resistance level. And so I was playing off this being a very strong level because it got rejected once, twice, and then got rejected again. So I was waiting for the breakout above this level. So that's what I was looking at when it comes to a longer term time frame. When we're zooming in, the strategy that I used was a ORB strategy, which stands for opening range breakout. Basically, I wait for the first hour of the day, all that data to form a pattern, and then I look at it and I break and I enter above the breakout. So let's just look at it here. Here's the very first candle of the day. When I look at the first hour of the day, all the way up until 10:30, this is the first hour of the trading day. What I do is I chart a high where the market has hit. So the highest point inside of that zone. You can see right here, this was the highest point that the market reached within the first hour of the day. As soon as the market broke above and closed above this highest point, that's when I entered the trade. So right here at basically 9:33 Central Standard Time, I entered the trade and then I let the trade go on and was able to close it here. So what exactly are my conditions? As I just mentioned, to enter, I need to break above the high from the first hour. And when I enter the trade, I enter a simple put credit spread. So a put credit spread is what I trade. I make sure to trade at 1 DTE. This gives me enough time to be in the trade that day. Most of the time, the trade will close in a single day following our take profit and stop loss rules. But sometimes you get an overnight trade like this. So it's a 1 DTE trade, and that has, based on all the backtests I've done, given me a higher return because I just have more time to be right on the trade. So 1 DTE done on SPX. And when I enter the trade, I am selling the 30 delta level. So I'm selling the put at 30 delta, and then I'm buying the one that's $20 below it. So again, if I sell a put at 3,000, just rough numbers, then I'm going to buy the option that is $20 below that, or 2,980. That's how I pick the different strike prices, and that's how I enter the trade here at this level. Now, how do I exit? Exit rules are very simple. Take profit is 40%. So 40% take profit, that's what triggered this. I think the day closed was about 25% profit. Overnight, due to theta decay, time is going on, it reached the take profit zone. So as soon as the market opened in the morning, literally first thing in the morning, the trade got closed out for about a 68% profit, greater than the 40%, but obviously we target that 40% as our initial take profit. From there, our stop loss to protect our downside is going to be roughly a 50% stop loss. The stop loss that I use is actually closing the trade once the short strike is hit, so the 30 delta level that we picked, once that strike price once it goes below that level, then I'll close out that trade, which equates to roughly a 50% stop loss. Now, why is this trade already so much better than so many other trades? Because number one, most 0 DTE trades, they just get in at a particular time of day. This one actually trades with the trend. It waits for a resistance to form, and then it waits until the breakout happens. So you're trading with the trend. Number two is you're not having small wins followed by one huge loss. Here, we have a 40% profit and a roughly 50% stop loss. So on average, I make about $300 per trade, and I lose about $400. So that means that a loser only takes up 1.5 winning trades max. So that way I can easily stay on top of my trades and have a smooth return curve, instead of having one that looks like that when I have a huge loss. So anyways, that is the power of this trade. It's super simple. If it gets held overnight, obviously just hold it. That's why it's a credit spread trade. You've already defined your risk, that you have a max amount you're okay to lose. But that is how I did it. Now, I also did this without ever looking at the chart myself. You can see here, Austin, how are you able to exit like right at 8:30 first thing in the morning? That's really fast. That's because I had a bot that was doing this whole thing for me. So again, I am the creator of a tool called the Options Auto Trader, which allows you to automate any option strategy you have. One of my favorite ones is the opening range breakout. You can see right here, I call my daily income bot. And you can see not all winners, because again, you're not going to be perfect in this strategy. But you can see here long-term I'm making money, which is good. You can see here that trade right here on 8/27, $355. This was opened by the bot and closed by the bot, all managed for me based on the rules I set. I just said, hey, enter the breakout the first hour and manage it based on these rules. And I did. You can see I have other bots here as well. But if you want to check that out, click the link down below. The first link in the description will have you in my actual trading plan of this strategy that you can go do it yourself by hand. And then the second link is to start a 30-day trial if you want to check out how bots can work for your account as well. See you guys.